How to fund rental properties in any market. All right, so today I'm with my man Eric, and today we are going to talk about financing rental properties the right way. Eric is a lender, represents iFund Cities, and the unique thing about Eric, he will lend to first-time flippers and first-time landlords, which on the secondary market, a lot of lenders, they want experience. He doesn't require experience. So that's one of the good things about him. You can get your stuff funded. So Eric, man, introduce yourself. Let people know how long you've been in the industry and how long you've been involved in real estate.
So what's going on, guys? My name's Eric. My company is iFund Cities. We're an alternative lender. What that means is typically you have three financing options when you go to buy properties, right? You can go to a bank, you can go to a hard money lender, or you go to a private money lender. We kind of set out to become the best, taking a good aspect of all three of those, mixing it into one alternative lending platform. And as Nas alluded to, we work with a ton of first-time investors because we are an asset-based lender. And what that means is we go and look at projects like this, and if the deal makes sense, we want to lend on it, right? We're not really looking at the borrowers per se, but more looking at the deal, and that's asset-based lending 101.
All right, with the asset-based lending, that means your deal is the focus. But what about credit score? What kind of credit score do I have to come?
So on a rental loan, which we're talking about today, a credit score is going to be a big aspect, right? Because we're going to close you in your entity, like your business LLC, but you are going to be a personal guarantor under that LLC. From there, we'll get a credit inquiry from the borrowers, and the minimum credit score we'll do on a rental loan is 640.
Okay, personal guarantee. So that means, right, if we do this loan, we're going to do it in my company name, but I'm going to personally guarantee.
Yep.
In the event that I default, you guys can come after me personally.
No, so we can own the collateral would be the property itself because it's a business purpose loan. You're signing as the owner of your business for all the activity that's happening in that business. So you're actually personally protected, but you're signing as the owner of the business.
Hypothetically speaking, this property here, I purchased for $140, okay? My budget right now is $60,000. I want to put $60,000 into it. It's worth about $285, right? How would that look if I were to come to you for financing because I want to keep this as a rental property?
Right. So what Nas is looking to do is what we call a cash out refinance, right? He wants to get the cash that he just spoke about for purchasing on the acquisition and the rehab side, get that cash out and go get more deals like this. So the one thing that we want to do on a cash out refinance first is during this process, Nas is looking at the market, looking around, seeing what properties around here are renting for, so he can come up with a good analysis and pro forma for his property to say, this is what I'm gonna list this property for from a market rent perspective, right? So the number one calculation we're looking for from that market rent amount is called DSCR. And when I go back to the asset-based lending, how we calculate the loan is off debt service coverage ratio. Okay, so we wanna make sure that your cash flow from your lease is gonna be able to pay your mortgage. That's why we're able to lend to first-time investors, because we're not really looking at themselves as the borrower, but we want to make sure that Nas's deal is cash flowing enough that we're comfortable giving him a long-term rental loan.
All right, so in the event it's comfortable, I can get my cash out.
Right, so say you're wrapping up project, right? So Nas calls me and says, Eric, I'm looking to get a rental loan. I'm ready to get my cash out. So I would say, Nas, do you have a lease in place? And you would go, yep. Got a tenant in there, they're moving in December 1st for $1,800 a month, right? So what we would do then is we would look at Nas's credit profile, look at the lease amount, and come up with a mortgage payment plan for him, right? We would give him his interest rate. We would tell him all our rental loans are 30-year fixed rate, which is great in an uncertain market environment. He knows for the next 30 years, even if he raises the rents, which hopefully he will over the next 30 years, his payment is gonna stay exactly the same. So he's gonna get more and more cash flow every single year. So we have a 30-year fixed rental loan and it amortizes over 30 years. From there, he tells me that this lease was for $1,800 a month. Say I give him a mortgage that's $1,200 a month. Nas knows that from this property, he's gonna be able to get all his cash back out and then cash flow $600 a month.
What if I started from the beginning? Like, right? So I come to you with the contract, like I found this deal for $140. I didn't start any work yet. How does that work? How do you fund that?
Absolutely. So that'd be our bridge loan financing, right? So in a bridge loan financing, we go up to 80% of the purchase price and 100% of the rehab. So in this deal, we give 80% of that 140 Nas is buying it for, and then we give him all of the money he needs to renovate it, 100%, working off a draw schedule. What that means is Nas completes a phase of the work. We send an inspector out here to verify that the work's being done and then reimburse Nas the next day in his bank account. From there, we begin the refinance process the same way we would do as if he was ready when the work's complete, right? So it's the same rental loan at the end of the day. You'd be paying off your initial bridge loan that we gave you to purchase and renovate the property. pay off that loan, and then he's set into your 30-year rental loan.
What if I come to you, I find a property that's worth $320. It already has a tenant in there. I'm buying it for $240. It already has a tenant in there. It's already rented, right? And it's rented for $2,200 a month. I'm getting it for $240. It's worth $320. And the market could demand more, but they're locked in the lease. How does that, if I come to you and say, Eric, let's get this deal done, how does that work?
So for the rental loan, and this is going to be standard for most banking and lending industries, you're going to go off the lesser of the purchase price and the as-is value, right? So in that case, we're going to give you a portion of that $240,000 for the rental loan, assuming that that $2,200 lease covers his DSCR that we were talking about before. So in this case, if we're going to give him, say, 80% of that $240 for a 30-year fixed loan, Nas is going to bring 20% of the down payment. We're going to see what that mortgage is. So say in this case, it's $1,500 a month. His lease is making $2,200 a month. He now owns a $700 a month cash flowing asset with a 30-year fixed rental loan.
When dealing with your company, do I have to get pre-approved or do I just call you when I get a deal?
So you really just call me when you get a deal. I'd love to meet you guys before. So if you want to call, introduce yourself. I'm into building relationships with people that want to do this for a very long time, right? So I want to talk to you about what your goals are, what you want your portfolio to look like in the next year, 5 year, 10 years. And that's kind of our pre-approval process, a little bit different from a bank. Like I said, I mentioned, we're an asset-based lender. If you're a first-time investor, you may be pre-approved $100,000 on the same deal, and then you could go down the street and be pre-approved $1 million if that deal makes sense, right? Because it's all based on the project itself. So the pre-approval process is really going to depend on when you actually do find that deal.
Eric, I'm a first-time buyer, first-time investor rather. I have no experience. Do I have to pay a higher interest rate or more in points?
No, you don't, right? So your interest rate and your points are going to be based off that credit profile and the deal, but you might have to bring a little bit more down payment so we can show that you're a little bit more invested in the project. One thing you can do to help your case is rather than make your first introduction to me and call me and say, hey, I'm a first-time investor, I don't really know what I'm doing, is a little bit different of a call from you saying, hey, I'm a first-time investor, but I'm in Nas's program. He's mentoring me. He's helping me with the underwriting. I found the real estate agent to pull the comps on the market rents, things like that. If you can show that you've got a great team supporting you, that puts you a lot above an investor that just, Googled what is a rental loan and wants to hop in the investment game, right? So prove to yourself, hey, why should I give Eric comfortable to give me this money on the loan by saying I got a great team and support system around me?
And what's the minimum loan you do?
$75,000.
$75,000 is the minimum. Is that the loan amount or the ARV?
That's the loan amount.
Okay, loan amount is
so I want to see a minimum 125 on the ARV.
Do you lend on Airbnbs? Because I found that some alternative lending companies won't touch them.
So we do. We love Airbnbs, right? Like it's a great way to make cash flow in this market environment right now as people are traveling more and making their house kind of the destination for travel. So what we do for Airbnb is we underwrite it a specific way, right? When you guys go to get an appraisal done next time, ask your appraiser for a 1007 form. On that 1007 form, it's going to tell you what that market rent is for your property like this as a long-term lease. From there, when we go back to calculate this DSCR to figure out if we're going to give you the loan amount or not, Nas is going to bring it to me and say, hey, I think I can make $2,000 a month as Airbnb. And then maybe the long-term lease comes back from the market rent on that 1007 as $1,800 a month. Us as a lender, we're going to look at those two numbers, put them together and come up with a formula to say, hey, this is how much we're comfortable with because that's what we think the market rent is going to be. And the reason I say that is cities more and more nowadays are making new rules on Airbnbs, right? So you want to be protected in a 30-year rental loan that you have multiple strategies for every project you do. Make sure you're not buying a property that will exclusively only work as an Airbnb. Make sure it's going to work as a long-term lease too, so you have multiple strategies if the market were to ever change.
When you're dealing with all these alternative companies, it's a lot of them out there right now.
Yeah.
Real estate been smoking hot the last 7 years or so.
Yeah.
So, more and more lenders are opening up saying, hey, I'm doing loans over here, over there. So, DSCR, what is that? Break that down to me. What is that?
DSCR is the number one formula for how alternative and hard money lenders calculate a borrower's approval, right? So when you go to a bank, often you're going to get approved on, they're going to ask you for your W-2, your tax return, and you're going to get a debt to income ratio, and you're going to get approved for a loan based on how much you can show, right? It makes you a bankable profile. When it comes to these alternative and hard money lenders, when we're giving the rental loans, to qualify, we look at DSCR. What DSCR stands for is debt service coverage ratio. And as Nas alluded to, man, a lot of these things in the real estate industry, they try to make these crazy acronyms and complicated things. What it really means is what you got coming in versus what you got going out. It's as simple as that, right? So debt service coverage ratio, your top line is going to be monthly cash flow. What your lease amount is, how much your Airbnb is bringing in, divided by your PITI, which means your principal, your interest, your taxes, and insurance. So simply, if you got $2,000 coming in from a monthly rent on your lease and $1,000 going out with principal, interest, taxes, and insurance, you got a 2-to-1 DSCR, which is a phenomenal rate, right? So we look for a minimum of 1.1 DSCR to give our rental loans. The better the DSCR, the more cash flow and the better deal it is for you.
Explain to me that 1.1 rate. How do you come up with that?
What I was saying, so basically how we calculate the formula is what you have coming in, your monthly cash flow, divided by what you got going out, which is your mortgage, principal, and interest, and then the taxes and insurance. You can log on to the county website, find what the estimated tax card was or the cert for your property from the last year, maybe bump it up a little bit, and then you go out and get an insurance quote. So anyone that has a rental property, you might not know this yet, but you have a DSCR. You might just not have calculated it yet.
Right.
But basically just take your lease and divide it by everything that you pay on it. We don't use utilities, vacancy rates, or other things like that for other lenders that might use that would lower your DSCR. We're simply just looking at the principal, interest, taxes, and insurance.
If I'm a first-time investor on my experience or whatever, but I want to do business with Eric, what's your website?
My email is eric@ifundcities.com, and our website is www.ifundcities.com.
As far as your social media, how do I get in touch with you?
Instagram is my number one thing. It's @Eric_IFC. Come follow me and check me out there.
iFund Cities, you doing loans nationally?
We're nationwide except for New York and California. That's the only two states we don't lend in.
It says New York and California. So there you have it, man. Make sure you check out his website, guys. Listen, if you want to get into this business, you're going to need funding, especially if you're going to hold stuff and all that. So you want to start building relationships. So in the meantime, please click on those videos that are next to me. And I am Nasser, AKA the Real Estate Guru. I'm not a guru, I'm a guru because I actually do this business. Peace.